Good morning and welcome. Patriot Radio News Hour. Joe and Jason here on this Friday. I hope it finds you well out there and you got great plans for the weekend. Wrapping up another crazy week. Yesterday, the Dow was everywhere yesterday, finished at the bottom. The NASDAQ was down like 150 points. The S&P was down. The Dow finished up 80. But right now, it's up 500. Gold's putting on a rally. No one should be surprised there. We got our inflation data, if you can, well, I guess, the inflation that they want to tell us all about. We've got that and so much more to talk about as, the amount of store closures just continues to pile up. Big Lots, it's like every day now. They're just like, well, we're going to close 20 stores in this state, 50 stores, 54 stores closing in California alone. Everybody better get ready as it looks like there is a big shift happening. Not just here, but all over the place. Our toll-free number, 800-951-0592. The website at allamericangold.com. And, Jason, it really is interesting as we're watching everybody anticipating not a lot of action at this Fed meeting at the end of the month, but that they're going to lay the groundwork for this September rate cut. And the inflation gauge, 2.5% from a year ago. The month over month was up 0.1%. So that was something they were hoping wasn't going to happen. Core inflation, which, they take out, this is what I call inflation for homeless people. Core inflation, because you take out food, you take out energy. It was up 0.2. It is up 2.6% year over year. Those were in line. Personal incomes. Now, this is something the Fed probably will like. Personal income only up 0.2%. They were expecting 0.4%. And again, I think that's probably a reflection not only of layoffs, but of probably people having to work less hours. And hours getting cut in that regard. Spending, here's the problem, right? Spending up 0.3%, right? That personal savings rate continuing to fall. And that really goes hand in hand with all the data we had yesterday, right? Credit card delinquencies, the highest going back to 2012, auto loan delinquencies, right? The consumer at the lower end already tapped out. But all in all, Jason, I would say this was probably not bad, right? They were hoping for maybe a little lower, as far as month over month and things of that nature. But at 2.5, that's still lower than the previous month. And they can at least say, see, the trend is still lower. We can start cutting before 2%.
Why cut rates at all? I'm listening to this good information as they've held this rate. And why cut? Because if you look what happens when the rate cuts start, that's when the markets tumble. For the COVID market crash, for the housing crash, the .com market tumble, Joe. Every single one of those, all those times, they started lowering the rates, and then the markets crashed. The idea is, we got to lower the rates to save the markets. Well, when you lower the rates, that's when the market starts to tumble, then why are you lowering it? It doesn't seem like the history would tell you, well, let's just leave the rates alone. Things are getting better. Let's just leave it. That's what I would read into this. But, remember in 2019, they started seeing the problems, right, Joe? And they started lowering the rates. And then here come the big boogeyman, coronavirus emergency, and the markets just went absolutely berserk. Not to mention the housing crash when they started lowering the rates because things were getting ready to look really bad. But they're going to do it, aren't they, Joe? They got all the info. They got the data says cut the rates, so they're going to cut the rates. It's almost like a signal to all their rich buddies. This is the time to make your moves. We're cutting the rates. Here comes the tumble because that's what's going to happen, Joe.
Well, and then we got the Olympics coming up, right? I guess there was sabotage in France. Someone set the train station on fire. It's chaos everywhere. Barack Obama now has officially endorsed Kamala Harris. So I think we're locked in here. I think it's going to be Harris versus Trump. And I hate to say it, it's going to be a lot closer than a lot of people realize. But we'll see how all of this plays out and how this all will, affect the markets. We did get consumer sentiment, the Michigan Consumer Sentiment Report. It was not good, but it hasn't been good for a while. And when people start struggling to pay their bills, right, they tend to, they tend not to feel so good, right? They tend to be like, well, yeah, things aren't great. And not surprised with that data as well. That's another piece of data the Fed can look to say, see, this is why we've got to do it. But the real reason Jay Powell was talking once again, we've been bringing this up all week about all of a sudden there's been a big switch with the big banks and having to write off loan loss reserves, continuing to get bigger and bigger at these banks. And primarily, we're not just, it used to be we just talk commercial real estate. But now we're talking autos, we're talking credit cards, and the big thing out of the New York Fed yesterday was the 90-day delinquency. That's kind of like the D-Day. That's like when the repo man starts coming out, right? That's when the banks are like, okay, that's it. Send them to collections. They're not paying. Jay Powell yesterday hinted, get ready for bank failures. They are coming. We've been telling you this. It'll be very interesting the next 3 weeks what the regional and commercial banks have to do. We'll be back after the break. 800-951-0592, Patriot Radio News Hour. Joe and Jason here, wrapping up the week on this Friday. Very similar market to yesterday right now. Dow's up 600. It's up 600 yesterday until it wasn't. The S&P's up 48. The NASDAQ's up 115. I always get nervous when you start seeing all the volatility, the big up days, the big down days, day after day, and then all of the action late in the day where all of a sudden, a bad day turns into a good day turns into a bad day. I think a lot of people are trying to figure out, where are we, right? Where are we, right? We didn't get what we wanted out of Google. We didn't get what we wanted out of Tesla. We'll have to wait till next week for some more of the Magnificent Seven. And then across the board on the consumer, it's just been a hammering, right? Didn't matter. Car companies, home builders, right? All the realtors and the mortgage guys and all of them, there's no action going. And then you think about what I'll call the secondary retailers, right? This is, hey, you don't buy your groceries here, right? You're buying knickknacks, stuff for the house, your things that aren't necessarily a necessity, right, to get to day in and day out. These places are going out of business left and right, and it looks like right now, whether it's Conn's, Big Lots, they may go out of business completely. There may be no saving a lot of these companies, and as we look in here, the 10-year note still down at 4.21. Crude oil, they've been really bashing this. This is another sign. The inventories, big inventory draws here this week. But it's like the market is anticipating a big slowdown that hasn't happened yet. Crude oil's down $1.50 right now. Gold's up $28, $23.82 right now. Silver flat today. So silver took it on the shorts here. Gold's hung in there really well, but silver at, $27.75. And I still say, hey, silver is an outright buy right now. Load up if you can. And then the dollar is weaker this morning. But again, the need to be diversified, it is so critical now because you can kind of feel once again kind of this next leg down, right? All year this year, it's gotten a little slower, right? It's not horrible. Like early on, it wasn't bad. But now we're probably at the point where we're like, okay, it's not great, it's not good, but we're not at horrible yet. Before horrible gets here, make sure you are the most diversified you've ever been. Our friends over at Y Refi, if you've got $50,000 or more, you got to at least check these guys out because you can get 10.25% fixed rate of return. And I'm going to tell you right now, I'll be shocked in the next, just take the next 5 years. That's nothing. I'll be shocked if Wall Street has a return of 10.25 on any year. I really will be. I think this is setting up for a big correction, and then everybody better just get used to sitting on the bottom for a while. Lock this rate in. Check them out. InvestYRefi.com. You've heard me talk about it forever. They don't play any games. You can use it as income. You can turn your income on. You can turn it off. You can compound it. They never attack principal. I mean, call them up. 888-YREFI24. 888-YREFI24. And Jason, it just seems to me that when we look at the bond market, when we look at, say, the oil market, Wall Street is kind of anticipating, we got a problem here. And they talk about, hey, we're rotating out of the Magnificent Seven. Why do I feel like this AI thing is going to look like a lot like the dot-com thing? Where, boy, it sounded great, but it didn't really work very well. And I'll give you a great example. So all of you know I was born and raised in Syracuse. I am a diehard Syracuse fan. Syracuse football, Syracuse basketball. I just can't get enough. I'm on the fan website every day, right? I'm reading the articles. I'm looking at the recruits. That's what I do. So they use GPT, whatever it's called, the AI, and they said, hey, name. And they did this for the 10 best Syracuse quarterbacks, the 10 best running backs, 10 best wide receivers, linemen, all the way through. Do you know what was hilarious? They would name guys that didn't even play for Syracuse, right? They would name guys that literally didn't even play that position. Like they had Dwight Freeney as one of the best wide receivers and Syracuse, and Dwight Freeney, he's in the Hall of Fame as a defensive end. He didn't play receiver, right? I mean, they would list, the 10 best. Pearl Washington was on there twice for the best point guards, right? Well, he's one guy. He can't be on there twice. Jason, I get this feeling that maybe this thing got overhyped, and when the results aren't there, there's going to be another one just like when we think about what this next crash will look like, I think it's going to be a mixture of all the previous crashes before, like the dot-com, the financial crisis, right? Going back, and when you look at the inflation crisis, right? I think it's going to be kind of this combination of all of them, the Great Depression. Right, because it's going to suck, right? We know it will. But are we going to have higher pricing, depressionary type events? I mean, when you look at autos and housing, that's depression type stuff, right? Yet prices keep rising. I wouldn't be surprised if we have really some of all of it in here.
Yeah, the length of the severity will probably be determined by if there's a war, because with the dot-com bubble, even though they tried to fix that fast, that's when 9/11 showed up, and you had war in the Middle East. But with the housing crash, there was a war still going on, it was a good excuse to economically is when things get tough, spend, right, Joe? That we had the bailouts, right? The bailouts. How big could you have spent back then? Bigger than the bailouts. But there was no war there, right? That was almost an economic situation to cover up why we're still lingering around in those countries and spending that money. But this time around, yeah, Joe, I think a combination of all is a good way to put it. But I think it's to be like the housing crash, where they don't have a massive bailout immediately to try to patch and fix things. They're going to be spending money in different places. They're going to be printing and trying to repair things and change wherever they're going to change. And if there's a war involved, then this thing can be stretched out a lot longer. That coronavirus crash was, I remember you talked about volatility. You remember those days? Down 1,000, up 1,000, down 2,500, down 750, up 1,000. It was crazy as it went pretty much straight down. And then, we're just going to print. We're just going to print. Half of all money that's going to be in existence will be printed in 2020. And they bounced that thing right back. I don't think that's happening this time. It's not going to happen the same way. I think you're right, Joe. It's a little combination of everything. It's never the same. But I think it's kind of a housing crash part 2, where they just react and do things a little differently is what it's looking like to me, Joe.
Yeah, man, I truly don't have a feel for housing right now. Everything in my gut tells me a big correction is coming, which is going to just exacerbate all the problems. But Jay Powell talking about bank failures again. When we look at, and I said this to everybody, well, the bigger banks don't have they got a lot more room when it comes to focusing in on the commercial real estate. They've been dumping these for the last 60 days. All the major banks are getting rid of all their problem commercial real estate and taking the losses, which is going to force all the other banks to do the same. So banks over $250 billion. So that's going to be, about 16 banks. The largest, you know what? I'll say 20. It's not 20. There's not that many banks with $250 billion in deposits. They've only got about 10% of their deposits, as far as exposure to commercial real estate, as far as their entire loan book, right? So here's these J.P. Morgan. All the loans they do auto loans, they do credit cards, they do real estate, and you name it. Only 10% of that loan book is commercial real estate. Still a lot, but that's manageable. When you go down to the 10 to the 250 billion, so that's probably your 100 largest banks. It's 40% of all of their loans. 40%. That's a problem. But it gets worse. 1 to 10 billion. 1 billion to 10 billion in deposits, okay? About 53, 54, 55, some banks up to 70 or 80% of all of their loans are commercial real estate. When you look at banks that are 50 to 100 million, it's just under 50%. And then the real tiny banks, it's a third. There's no room in these banks to take these losses. And Jay Powell just pointed it out very, very simply by saying, hey, when we look at where the problems lie in these smaller capitalized banks, it's undoubtedly going to worsen the credit conditions, and it's a certainty that we're going to have more banks go bust. And Jason, this is just easy stuff. It was something where I knew they had a lot of exposure, but it really is, when they talk about the regional guys. So these are the guys that are, like $100 billion, maybe 150 billion, kind of Silicon Valley-like, Signature-like. Over half of their loans are in commercial real estate. How are they going to be able to take these write-offs? They don't have enough depth in deposits to be able to absorb it. And then these other banks, these really small banks, Jason, they're right next to them. They're right near almost half of their stuff. It just seems like we're going to be setting ourselves up for a tidal wave of failures. And I think this is why we're going to see the economy really slow down. There's not a lot of loaning going on in any of the banks right now. And on top of that, these write-offs, I don't know that, no amount of interest rate cuts is probably going to save these banks.
No, and I don't know how severe the housing prices will go down, but it's going to happen. There's some great big entities ready to pounce on this crash that's coming. Blackstone being the largest property owner of this country right now. They own 300,000 homes or units in this country. And, they're not going to be buying homes at record prices, are they, Joe? They're waiting for this thing to get rolling. That's why they're going to lower the rates. Well, we got to lower the rates. We're going to signal to our friends. Get ready to start buying because there's going to be blood in the streets for the average guy who's not prepared for this, Joe.
When we get back, we've got a Trump special. 800-951-0592. Patriot Radio News Hour. Joe and Jason wrapping up this Friday. Got just a great opportunity. Pretty cool here. I was waiting. I figured it would be coming. It is here. We have the Donald Trump fight round. So it is a 1 ounce silver round. And it's got fight and the date, 7/13/2024. It's got the stars and stripes in the background. Donald with his fist up in the air. And then it's got the female Secret Service agent and the male Secret Service agent, kind of around Trump. Here's what we're going to do. I'm trying to get it up on the website so you can see it. I'm having trouble with it, but it's pretty darn cool. If you just want to buy these Trump rounds, you can buy them one at a time, or you can buy them in a roll. $35 if you want to buy them, just separately by themselves. So $35 a piece. You can buy as many as you want. You want to buy 10, you want to buy 5, you want to buy 1. But I'm going to also do a $20 gold piece. You get to pick it, Liberty or St. Gaudens. $2,585. Gold's up $20. No price increase on the 20s. And then for every 20 you buy, I'll give you a Trump round. So how about that? So that's like $35. So if you buy 10 20s today at $25.85, you're going to get 10 Trump rounds. Or you can just buy the rounds by themselves at the $35. I'll try to get it. I'll get it up there on the webpage so you guys can see it, and you'll be able to order them on the website. But, Jason, it's pretty cool, and I figured that it was coming, and I know that we got a lot of Trump lovers out there. We did the Trump 45 round before that one, and now we've got this one here. I think this is the third different Trump round we've had, but they're $35 a piece, or if you buy 20s, we're just going to throw them in there. However many 20s you buy, that's how many Trump rounds you're going to buy, all for $2,585 at 800-951-0592. Just another one of those cool things. And let's face it, it's an ounce of silver.
That's the most important part of any of the coins we sell, depending on if it's old gold or even if it's 10th ounce, which is modern gold, junk silver, silver eagles, silver rounds. That is always the most important part. Stacking as many ounces of silver or gold as you can is super important, especially with what's getting ready to happen. I had some customers that bought some silver recently, and then suddenly silver came down. and I had to have a long conversation. I'll have these conversations as best I can. That if you're new into buying gold and silver, it's going to move around a little bit. It's not just going to just go straight up. This is the first kind of big pullback we've had in silver this year, and buying silver today is a great way to jump in because it's not going to stay around $27 range for too long. And will it dip some more? I don't know, but it's the trajectory of silver and gold, if you just look at it on a long enough timeline, will always go up. And it's going to go up because for anyone listening that I know, has the price of goods and services gone up or has it ever gone down in your lifetime? I haven't seen food go down in price, Joe. And housing hasn't gone down in price. So gold is simply wealth protection. It holds value. And, Joe, it's a great time to be getting in, especially when there is a dip.
Yeah, right now gold's up $22, $23.85. Silver getting ready to just turn positive, $27.78 right now. I mean, right? We're talking about almost $28, and we're like, oh my gosh, so that's nothing for silver. Silver's, we always talk about gold and silver. Silver's the little brother. The gold's like the older, responsible brother. Right, and you got to be home by 6 o'clock, and he's telling his little brother, "We got to leave the playground. It's time to go." And silver's that wild child. It moves a lot more than gold, but listen. It's going to be economics 101 when it comes to things that are real are going to be where you want to be. If you don't hold it, you don't own it. And that's just as simple can be. Because in this debt monetary system that we're living in, we know we're coming to the end of this cycle, right? They're getting ready. They need to change out. They want to go digital. They have to go digital. The debt, it's incredible now. We're like, what, 30 billion away from 35 trillion, right? We're going to hit it any day now. And the amount of debt that we're paying, the interest payments are overwhelming. We're already at almost $1.3 trillion. And this was in June. You got July, you got August, you got September. There's no big tax. That's like the worst 3 months for government debt, followed by January, February, March. Why? Because there's not a lot of tax revenue. You got April, you got the biggest thing in April, and then you got October. You get a little bit in October. But, Jason, it is overwhelming, the amount of debt that is getting tacked on here. We know, think about this. I think we're going to get a very dovish Jay Powell next week. The Treasury, let's not forget, the Treasury has to increase auction sizes in August. Why? Because they're out of money. And see, this is where we're going to get a big jump. See, right now, the Treasury's running down its checkbook to try to make it look better. And then all of a sudden, boom, you're going to hit these months where all of a sudden the debt goes up $300, $400 billion in a single month because they got to reload the checkbook. And then I think we're going to get that rate cut in September. Jason, things are really setting up very nicely for gold and silver. Get in here. Don't let this – hey, listen, we hit a new record high, $100 higher. We've got a higher low setting in. Look at gold already back above that 2380 level. And silver – we know what's going on in the silver markets. Huge silver shortages. They're going to continue. And now they're saying the silver shortage this year is now going to continue into 2025. So, Jason, I think it's a green light here all across the board. And, oh, by the way, there's a new continent that has decided that gold may be the way to go. We're going to talk about that next. It just seems, doesn't it seem like outside of the G7, all the other countries are either talking about or buying gold? One or the other, right? They're either talking about buying gold or they're actually buying gold. I'll tell you the latest continent when we get back. Patriot Radio News Hour, Joe and Jason, wrapping up a Friday. 800-951-0592. Joe and Jason wrapping up the week here on this Friday. I've done it. It took me a while. I finally remembered how to add it. So if you want to look at the Trump fight round, it is now up at allamericangold.com in the shopping cart. You can see them there. They're $35. You can order as many or as few as you like. But if you buy a $20 gold piece, by the way, $20 gold pieces, I'll just tell you what they should be. Hold on here. I know I should have done this already. 26 and a quarter. I've got them at $25.85. You buy a $20 Liberty or $20 Saint today, you're going to get a Trump round for no additional cost. If you buy 20 of them, you'll get a roll of Trump rounds for no additional cost. Or you can just buy the Trump rounds for the $35. The fight round, Donald Trump with the fist in the air, with the Secret Service. And they even got the female one, you know, she comes up to like Donald Trump's chest, right? You know, kind of doesn't really make a whole lot of sense. You at least get a taller one to try to at least shield them a little bit. But then it's got the other guy, you know, very Secret Service, like with the sunglasses on and, you know, kind of, you know, all that cool stuff. The only thing that's kind of missing was, and I figured probably a little too hard, was to kind of make that blood spot, you know, that blood spot on the cheek. I didn't, of course, I can't see, so maybe it's there and I just couldn't see it. But check them out. Pretty cool. And like I said, the best thing about it is it's an ounce of silver. I'm going to use it. This one's going to be my new golf ball marker. This is what I'm going to be throwing on the green over at the 500 Club to mark my ball. It will be my Trump fight silver round, and it's got the date on it. It's got fight on it. So a pretty cool novelty thing, Jason.
Yep, just call 800-951-0592, gold and silver, right, Joe? I'm surprised that we are not being just resiliently attacked with orders this year with gold. You know, something I wanted to mention, Joe, is how good has gold performed over the last year? I mean, how well, actually the last few years, you had these rate hikes that went up dramatically, and gold just kind of, while you know, gold should have been just decimated by rates going from 0 to 5%. I mean, instead, gold just kind of held the 18, 19, 2000 range for 21, 22, 23. And then we get into 2024, and boom, what happens? Gold just blows up to $2,400. So that shows very, very strongly that when good economic indicators as far as what's going to make gold go up fast, what's going to happen now, Joe? I mean, look, it stayed up during a massive rate hike cycle. Gold should have went down hundreds of dollars, right?
Yeah.
Should have went down hundreds of dollars, and it stayed strong, and now it's record highs.
You brought up that's a really good point here. Go back to the financial crisis. It was the rule. Interest rates go up, gold goes down. Right? They tried to say there's this relationship with gold and the dollar. There is. But what's happened now is there's been a big shift in how people view that relationship. And to Jason's point, when we were going from 0 to 5.5%, gold should have got murdered. Should have been down and down big. Instead, what happened? Not only did gold hang in there, gold actually went up. Not a ton, but it was going up. And then as soon as the rate cycle of higher rates stopped, look at right now today, gold's up almost 24% year over year, 24% in 1 year. Right? We haven't raised interest rates in 1 year. And look at what gold has done. Now we're talking about, what did we just talk about in the last segment? Hey, we're anticipating the Fed to start cutting rates. Well, when the Fed cuts, that's normally, again, we're going to see gold rise again. The thing that's changed now is gold no longer believes, and it's not gold that doesn't believe. The world no longer believes in this thing about high interest rates and strong dollar. That correlation has been broken. And now the latest, Africa. You know, we talked about it was Nigeria who had just brought their gold home. Well, that wasn't enough. Nigeria, Uganda, Zimbabwe, Madagascar, and several other African nations are all making moves to increase their gold reserves. And now South Sudan is the latest country that is now turning to gold. Uganda Central Bank announced its gold buying program. Tanzania, right, announced that they're buying gold. And Jason, these aren't huge countries. You know, Nigeria is, kind of probably the biggest of them. They're not necessarily the biggest countries out there. But it's about the volume of countries now that are saying, hey, guess what? Instead of buying dollars, because that's all these African countries, they buy dollars. That's what they're buying, dollars. They're saying no. We're going to buy less dollars, and we're just simply going to keep adding to our gold. Some of these countries have never bought gold before. Some of them have stored gold in New York, in London, and saying, you know what, the heck with that. Bring it all back home. And it just is a growing trend. And why it is, when you sit there and we talk about where we think things are headed, say the next, really, just say the next 5 years, which is no time at all. 5 years is no time at all. We're going to have a debt of over $50 trillion. I think we're going to have most of the world continuing to add to their gold holdings. And again, what type of gold price, what type of silver price are we going to see? I'll still say this. Silver's the only thing that hasn't hit a new all-time record high of all the commodities out there. Wait till it happens. Patriot Radio News, our final segment of the week. We'll be back right after this. 800-951-0592, Patriot Radio News Hour, final segment of the week. Any $20 gold piece, a Liberty or a Saint, you're going to get a Trump fight silver round. You can check them out at allamericangold.com for $2,585. You get both coins for that price, or you can just buy the Trump rounds. Normally, when we do these things, hey, you got to buy a round. You can buy these individually at $35. You can buy as many as you like. They're also up now on the website at allamericangold.com, and you can check it out. Pretty cool looking coin. I think right now, we had the Trump mugshot one, right? The Trump 45th president. Now this one, I think this one's the best one. The mugshot one was pretty cool, but the fight one, I think this is the best of the three. Check them out, 800-951-0592. Now all these African nations, and we know the majority of these African nations all want to be part of BRICS as this thing continues to grow here. And then how about this? Now, we're going to hear from Apple. It's either next week or the week after. But according to data coming out of China, for the first time ever, Apple phones are out of the top 5 selling phones in China. They've fallen to number 6. Apple now only has 14% of the Chinese market, the lowest ever. I don't know what that will do for Apple earnings, but Jason, there's competition for Apple, maybe not here, but in these overseas markets, there's plenty of competition when it comes to phones.
Yeah, I don't use one, so I don't. I just they're really expensive, and I'm a pretty basic person when it comes to using these things. But I'm not a very good expert when it comes to why an iPhone's better than an Android and whatnot. But you know what? It's interesting. Sometimes with companies, people believe that there's monopolistic companies out there. If left to their own devices, the monopolies end up falling apart all on their own. They never really stick. It always ends up being some government intervention that keeps the monopolies in place, Joe. That's what keeps those monopolies in place now. So what does that mean for America? I guess is that going to hurt our GDP, Joe? And Apple phones are being sold less. I guess is that what that is?
Well, of course, this is in China, so I'm just. One of the things that we'll look for when Apple's earnings are out, obviously China's the largest market for cell phones in the world, so it's a pretty important market. It was interesting to see, Apple now falling out of the top 5 there. So we'll have to see. Did you see this now? So Obama has endorsed Kamala Harris. Jim Cramer, the booyah guy, the stock cheerleader guy, he just threw his endorsement behind Kamala Harris. I mean, wow, that's just, here we go, Jason, right? It's going to be the year of chaos has lived up to its bill. Matter of fact, it's probably more chaotic than I ever thought it would be.
Well, we still have a few months left here, so it's we're still in the tail end of July, Joe. So we have 5 more months. So I really do believe I think next year gets worse. The results of 2024 is going to really be a punishment for the years to come.
800-951-0592. Take the time. Keep adding to your portfolios here, guys. Patriot News Hour. God bless everybody. I'm going to be back on the short edition of the Half Empty Cup. Jason, good luck on your surgery, and we'll see you next week.